Hi guys, it's Thomas here from COTBase.com. Welcome to a weekly COT review. Today we're going to be analyzing the 38th Commitments of Traders Report of 2022, and as we always do, we shall start off by looking at the largest changes in commercials positions. But before we jump to the review, just a brief reminder for those who are new to COT analysis. Here at COTBase.com, you'll find a lot of educational material, not only in written format, but we have some very useful videos as well. These videos will guide you through the analysis process, explaining to you step by step how you can use our wonderful tools. Back to the review and starting off with the first market, the dollar index. And I should point out that we're going to have a look at the Euro US dollar market with the help of the wonderful iCOT Intraday Indicator. But before we go there, just let's have a look at this 45% change in commercials net positions. We're of course analyzing classic COT data, and this change is measured on a 52-week look back period. You can see that the magnitude of this change in traders positions is very, very large, possibly the largest change in the past 1 year. The only issue, it is a bullish COT change signal, but we are already experiencing a significant rally in the dollar index, meaning this signal could be late for us, or at least, in other words, are in a different way of looking at it, it's supporting the continuation of this rally. Moving on to the 5-year chart, you can see that we were and still are in a more bearish COT extreme situation, but the market is not reacting. So we should be patient. It simply means that there's momentum in the market, and we would need a greater bearish extreme before we reach that top in the market. The next market is the euro. No surprise there, since the euro is the largest participant in the dollar index. Here we have a 32% change in commercials net positions. You can see the magnitude over there. Bearish, of course, amongst the top 3, top 5 changes, and supporting further decline in this market. Moving our attention to the 5-year chart, you can see that here we have been in a more bullish COT extreme zone, moved away from that level a little bit. Still closer, I would say, but it seems that we still need to wait for the market to react to this bullish extreme. So in the medium to long run, we should expect a bottoming pattern, but of course these things require a lot of time. This is simply measuring stresses in the market. Interestingly, even though the market is going lower, bullish stresses have decreased a little bit right now. The next market is the Canadian dollar. Here we have a 26% change in commercials net positions. Again, this is a bullish COT change signal. And this is actually a much better example. So even though we see a decline in the Canadian dollar, we have this bullish change signal being much greater than average. We have seen similar changes in the past, so I wouldn't say top 3, top 5, maybe top 10, but it does suggest that we should see a bit of a rebound happening after this decline. We should see some strengthening in the next couple of days. Of course, this is a short-term signal, the COT change signal. Moving on to the 5-year chart, you can see that we are more or less in between the two extremes. Commercials are just crossing the zero line, maybe becoming net long. I wouldn't put too much emphasis on the stress analysis in the case of the Canadian dollar right now, or you may just focus your attention on a shorter time frame, and within that, it is actually more bullish. We're not going to go to large speculators COT extreme analysis, but shift our attention to our iCOT Intraday Indicator. So this is the Euro US dollar currency pair. We talked about the dollar index. We analyzed the euro. We understand that this market is headed lower. So here we have a 4-hour candlestick chart, and these are our wonderful signals from the iCOT Intraday Indicator. Now, by the way, I'll just pause for a second. If you're new to this video in our services, at cotbase.com, you will find a lot of explanation on our Intraday Indicator. It is not data from CFTC, but we've worked many years to develop an indicator that mimics and follows the concepts of classic COT analysis, but it is useful in the shorter time frame. So this is actually gold on a 1-minute candlestick chart, and these are scores that we calculate, and we produce these signals. Now, if you look at these scores, you can see that they're quite similar to the COT charts that you see underneath the market data, the price data. So it's quite a useful tool, stress measuring tool in a shorter time frame. So this is a 4-hour candlestick chart. You can see that we have these vertical lines. We call them stripe signals. These are the strongest signal types when both commercials and speculators are at an extreme. We do have certain signals, these yellow diamonds, when commercials are at an extreme, and when you see that the color changes of the candle, that's actually signaling an extreme stress in speculators. So this was the 4-hour candlestick. Let me just show you for a moment the 1 hour. This is the 1 hour, and we can, let's say, have a look at a 5-minute candlestick. And this is what that does. So this is the iCOT Intraday Indicator. I just wanted to show you how you can basically go from a classic COT analysis and then understand the big picture on a 5-year chart, understanding stresses coming from participants in the market. And once you have identified the trend and a direction, you can switch your attention over to the iCOT Intraday Indicator and then get a more focus on the shorter time frame. Thank you very much for your attention. I truly appreciate you being with me. I hope you guys will have a wonderful weekend, and I hope to see you in my next COT review. Take care. Goodbye.